What if I told you there's a line in the tax code that lets you pull money out of your business and into your pocket completely tax-free? No payroll tax, no self-employment tax, no income tax, and it's not a loophole someone dreamed up on the internet. It's been written into law since 1976. It's called the Augusta rule. Today, I'm going to show you exactly what it is, how to use it the right way as a business owner, and the documentation you need so it holds up the IRS ever come knocking. Stick with me to the end because the mistake most people make is the one that turns this from a clean strategy into an audit headache. Let's start with plain English version. Here is what the Augusta rule says. If you rent out your personal home for fewer than 15 days in a year, so 14 days or less, you do not have to report that rental income at all. It's excluded for your taxable income, tax-free. It got its nickname from Augusta, Georgia. Every year during the Masters Golf tournaments, homeowners near the course rent out their houses to visitors for a week or two and collect thousands of dollars. Congress carves out this rule so those folks wouldn't get taxed on a few days of rental income. Now write down this one number and never forget it. 14 days is a hard ceiling, not a slab. If you rent for 15 days or more, you do not just lose the exclusion on the extra day. You lose it on every single dollar for the whole year. And now you are filing a Schedule E. Here's where it gets powerful for those of us who own a business. You do not have to rent your home to a stranger during a golf tournament. You can rent your home to your own business. Think about it. Where do you hold your quarterly planning meeting, your board meeting, your annual strategy sessions? If you are hosting real business meetings, your home becomes the venue. So instead of paying a hotel conference room, your business pays you fair market rent to use your home. Watch what happens. Your business deducts the rent as an ordinary business expense. You receive that money, and under the Augusta rule, you do not report it as income. The business gets the write-off, you get the cash, and neither side pays tax on it. You've just moved money out of your business tax-free. That's the whole strategy in one sentence. Okay, let's get practical. Here is the step-by-step. Step 1, have a real business reason. Each rental day has to line up with an actual business activity, a board meeting, a strategic planning session, an annual shareholder meeting. Step 2, set a fair market value rent. This is the make it or break it. So listen closely. You cannot just pick a number out of the air. Go find what a comparable space costs in your area. A hotel conference room, a co-working meeting room, an event space, an Airbnb you can rent for a day. Get the codes in writing and save them. Your rent should look like those numbers, not double them. Step 3, draft a simple rental agreement between you and your business. It should state the date, the space being used, the purpose, and the agreed rate, and who attended that meeting. Step 4, actually hold the meeting and document it. Keep an agenda, notes, or minutes, and a list of who attended. This is the proof that the meeting was real. Step 5, pay it properly. Your business pays you with a check or a traceable transfer, the same way it would pay an outside vendor. Step 6, count your days. Keep a calendar of every rental day and cap yourself well under the limits. If you meet monthly, that's 12 days, comfortably under 14 days. Let me tell you why I keep hammering on documentation, because there is a real case that shows exactly what happens when you skip it. It's called Sinopoli v. Commissioner, decided by the tax court in 2023. A few business owners run their company's monthly meetings out of their own homes, and they had the business pay them rent for it, about $3,000 a month each, over 3 years. But here's where it fell apart. When the IRS looked closer, they found two problems. One, The rent was wildly inflated. Nobody had checked what a real meeting space actually costs. When the IRS researched local rates, comparable space rented for about $500 a day, not $3,000. And two, they couldn't prove the meeting happened. No agendas, no minutes, no calendar. For the very first year, they had zero documentation. So the courts did the math the boring way. A reasonable rate times only the meeting. They could actually prove the result. The business was allowed a rent deduction of just $6,000 for that first year. And the rest of the $290,000 plus was thrown out. Gone. Now hear me clearly. The strategy itself was never the problem. The court didn't say you cannot do this. It said you did it sloppily, the rent was unreasonable, and the meeting were not documented. So the deduction collapsed. That's the whole lesson. This is a legit, powerful strategy. But it's not pick any number you want strategy. What protects you is exactly the boring stuff we just walked through. The comparable codes, the written agreements, the agenda, the minutes, the clean payment trail, and staying under 14 days. Do those and you are standing on solid ground. Now for my Illinois business owners. Illinois has a flat income tax rate of 4.95%, and the state calculates your tax starting from your federal adjusted gross income. So follow the logic with me. Because the Augusta roll income never shows up in your federal income, it never makes it onto your Illinois tax return either. It is tax-free at both the federal and the Illinois level. And the deduction your business takes lower your federal taxable income, which flows down and lowers your Illinois tax too. The benefit works on both sides of your return. So let's bring it home. The Augusta rule lets you rent your home to your business for up to 14 days a year. Your business deduct the rent and you receive it completely tax-free and here in Illinois. The keys are: hold real meeting, charge fair market rent, document everything, and never cross 14 days. That's exactly the kind of strategy that's sitting right there in the code, waiting for owners who are willing to learn it and use it the right way. If you want help setting this up properly for your business, the agreement, the rate, the documentation, that's what I do. See you next Monday.